Good afternoon. This is Serge with TradeJolt.com, and today is Easter Sunday, the 12th of April, and I snuck away from my family. Actually, everybody's in their different corners, secretly looking at YouTube or chasing down their Facebook people. So I took a few minutes to indulge in my favorite activity, which is trying to guess which way the stock market is going and which stocks are likely to go up and down, and seeing what attractive plays I can do on that. Those of you who have known me for a while know that I believe that we are at a kind of a paradigm moment in the global economy, and we're in a time where certain industries are dying and others are starting to move up. One of my themes is that we're seeing the end of the internal combustion engine and, of course, the beginning of electrical vehicles. And the dominant play in that sector is, of course, Tesla. I have done well this year trading around Tesla. We had one of our biggest trades, biggest gains all year. I think $500 bet on Tesla, make about $18,000. It doesn't get better than that. But since I've been kind of on the sidelines because I wanted to see a little bit more what was going on with the broader markets before jumping back into a Tesla trade. As I've explained over the last couple of days, my take is that the market is going to rise just a little bit from here and then take another deep dive down. That doesn't mean Tesla has to do the same thing. So I wanted to just take a look right now. So that's what we're doing today. First of all, I brought up here, what you see on the screen is a long-term. I went back as far as I could, and I guess Tesla went public right around 2010. I'd have to go back and check. But I wanted to see what Fibonacci would tell me about Tesla's potential course from here. So first I tried to sketch out a few Fibonacci patterns here. The interesting thing is I took the low here and to try and see what it would tell me about this this stock and whether the past corresponded to expected Fibonacci predictions. So if you take the low to the high here and project from there to where the next high would be, you'd have thought it would be right here at 73, and it certainly reached 73, but it looks like it didn't even pause. By the way, each of these are monthly candles. Normally you'd get a retracement here, like let's say 90–95% of the time, back to at least levels of 50, and we never got that. It just kept right on rocking and rolling. So you could say, see, that proves that Fibonacci levels are bogus, they don't work, they're meaningless. And the truth is that they sometimes are meaningless, or let's say this, they're not perfect, they don't always work. And if you ever bet the ranch on them working, guaranteed that's where they won't work. But let me show you something else. If we mark that as the high that, say, never got hit, and we put that as the basis, let's just assume for now that this was a high and we then saw a retracement down to here. So our peak was right here. Then we would expect that the next Fibo level would be right where this thing, setting this as the 61.8% level from here to here. You'd expect another pause at 38%. Where did we get the pause? Very close to there. You'd expect a retracement of 50%, which is exactly what we got. And you'd expect the next high to come right around this level of 166 and a retracement of 38% there. We got it. It's not exact, but we got a pretty good high right there and a retracement of a minimum of 38%. That would have told us that's our kind of talking in Elliott word terms. Here we have a 1, a 2, a 3, a 4, and then the 5 is going to be out here. So let's keep going. Take another Elliott starting down here, trace it up to where we would have expected, where that peak was marked, not where it actually attained, but where it was supposed to have been, and say, okay, that's when our wave 5 on an Elliott scale should take us. See if it's going to start again with 5. No, it didn't. Well, forget it. You know that I mean the wave 5 to be here. So tracing it out here, 1, 2, then up here, of course, 3, retracement down here, 4, and then up here, our 5th wave. What would that call for? That would call for a retracement. If this whole thing is seen as one single wave, we would want a retracement in an A, B, C pattern down to this 38% level, and that's what we got. Okay? Interesting. So, did Fibo not work here, but it worked here, and it worked here, and it worked here? Possibly. Now, let's look again from there. What does it tell us about this? Let's use the same thought process. Set this at 38%, and it tells us it should reach at least this point, which it did, but it went beyond that. So here you could say, well, you know what, this is, let me see if I marked it right here. That's actually a 50% retracement. Did I put this 38? I did. Yeah, so this was an overshoot, if anything, of our expected high right here. But what I did want to mention was this. If this analysis is correct, 1, 2, 3, 4, 5, A, B, C, then we should see, we should view this whole thing as a wave 1 of a larger pattern going up much more. And this wave here will be typically proportional or symmetric to this larger wave. So it would take Tesla in the, I'd have to project it out on a different chart, but much, much higher than today's price. So that's that. Let me pause this video and switch over now to a daily chart. Okay, continuing right along here. I brought this to the daily charts, and here we have a very confusing picture. I traced here a little bit of the different Fibonacci levels. You have the first one being the wave 5 of the small internal waves being marked by a gap up. When you have a gap up, you don't necessarily have the corrective wave, the ABC pattern, but that still counts as a wave. Often when it tests it, you'll see it come back down and retest exactly that level. But in any case, there you had your first, let's call it light blue wave, consisting of 3 smaller blue waves. Then a second light blue wave projected out here. That's where it came. And that would have called for a top right here, and that's where we got our top. We had less than a 38% retracement. That's unusual, and at times it makes me doubt my analysis when I see that, but it does occur. It occurs in a very bullish pattern or a very bearish pattern that your retracements on the wave 5 are not to the 38% level. So anyway, from there we would have expected the next, call all of that, we have 1, 2, 3 light blue waves. That makes a bigger outer, call it green wave pattern. If we project up from there, we would have expected the next high right here. That's where we got it. I didn't break that into 3 individual waves within that, but we would probably look for it probably here and there. But in any case, from there, the larger, so we have our 3 blue waves projecting out here, and that corresponds to a larger second green wave. And here we could, if this is a bullish pattern, you almost always, even if this were part of a corrective longer term down wave, you would still see a mirroring effect. Those of you who have been my clients for a while or following my blog for a while know that I always look for the mirror effects because they happen more than 70% of the time and provide a basis for very, very profitable trading. So in any case, we got our second high expected here, and it actually went higher. From there, we started seeing here a wave down. I marked those down waves in red here. It rallied up almost the full 100%, but it didn't. So this, in my book, consists of another wave. This consists of a wave. If it had gone all the way up here, I would not count it as a wave in the Elliott sense of the word. In any case, this was wave A, B, and then here I would expect it a wave C to at least here, and sometimes you get a 5-wave pattern down. Will we get that? We don't know. If we do, it will come all the way down to 218, and it will actually give back everything that it's gained in this period. So what is going to happen? For that, I like to look at the relative strength indicator. I like to use 3 different indicators, one set to 14, one to 50, and one to 100 periods. And then I trace of course, my price higher highs, which you see with a red arrow, but I'm going to erase it again because it's getting to be a very busy chart. I don't use a 14-day pattern because that only has relevance for 14 periods, and I want to look farther into the future. A 50-day pattern may already be relevant. If I look at this and I trace my lows, I see I've still got lower lows on all 3 here. However, so you could say, well, is it convergently bearish and therefore going to move lower? I believe the answer is no. And the reason is, as I was tracing my highs here, when it started to mark a downturn, I actually didn't have, if I look at my last 2 highs, same temporal view, everything was convergent. In other words, pointing upwards. That means that whatever correction happens, it's not a permanent correction. By permanent, I mean it's not the start of a new downtrend. In other words, my uptrend is still intact despite any damage from this corrective wave. So that means we are now in part of a larger up pattern that should carry it well beyond the point it's at. I'm going to show you what I would have expected to see if that were not the case. I would have expected the RSI, let's take the 100-period RSI, to have made kind of this kind of pattern. Sorry, but I can't really draw squiggly lines with this too well. So you'll have to go with my, well, let me see if I can. No, this doesn't give me a drawing tool. Sorry about that. So anyway, if this had been a peak of the RSI and I had traced down from my peaks, this would have been downward sloping at a time when the price was upward sloping, and that would have pointed towards a divergent pattern, but that's not what I have. And that would have indicated that this downtrend is part of a longer downtrend. We get that on the SPY, but we don't have it on Tesla. So I think this did mark the low of this period. We're now going to see Tesla reaching higher highs. Next point I'll be looking for. Let me see here what we have. We had a low. That was the high. We expected with 70% certainty to get to this other point at 555 when it breached it here at 477. That's what we got. It retraced down and it's challenged this and surpassed it. See here, it challenged, went down and broke past it. So now I think it's on to the 680, 700 level. There's a bit of a gap here. There's a lot of resistance right there. So that's where my best guess is for the next temporary high, and then from there it'll keep on moving up. So what do I foresee? I foresee a pattern something like this, then a correction down here, then a further move up, probably somewhere where we have here the resistance, correction back down to there, final push, it'll pause here, and then it'll finally break higher. That is the most likely outcome that I see for Tesla right now. What would contradict that? Well, if I see Tesla break down below this level here, then I would say this analysis is wrong, and I would change my mind, and I would change my bets and everything else. Right now, in terms of bets, let's see what we could put together. Betting, now let's look at time. See if we have, can do some cycles here. So from high to low, that gives us kind of those cycles. Let's get some vertical lines going here. So we're at kind of this cycle right now. These would be possible other turning points. Let's see, it took one to low to high about one cycle, then again the low. This is not exact. If we mark this here, see, we would have expected the high here. We came early. We would have expected the low here. That also came a little bit early. So all of these are maybe a little bit moved towards the shifted left. If I can do that. See if it lets me. Kind of like shifted just a little bit left. Something like this. That would probably be closer at a high. Okay, now how long could it take to get up here? So there's not a lot of resistance. Once it gets here, it'll pause a little bit, go down to maybe here, and then quickly move up here, another pause. My guess is 1 week to make it to about the midpoint, 2 weeks to make it up here, and we might want to throw in a third week to be safe, but I'm going to say 2 weeks is probably the time period by which it could reach this temporary high here at the, what is that level? It looks like 680. All right, so now let's look at some price levels of options to see how we play this. Okay, let's go over to our options. And I'm targeting a price of 680, so I set that as the midpoint. And I want to buy an option that's a certain amount lower, 10 points lower. And I want to buy one that's 5 points higher. That way, with the difference between the two, I will make $10 on 2 options here, and I will lose $5 on 2 options here, leaving me with a net of $5 on the entire transaction when the dust settles. I tried to set the time period to choose both April 24th, about 12 days away, and May 1st. But for some reason, no options are offered on May 1st or May 8th. The first date I can get is May 15th. So I'm looking at the prices for an option set that expires 33 days away and for one that expires in 12 days. And while this gives me a lot more time to be right in the direction of the move, this gives me a lot more bang for the buck, and I'll show you. Let's start first with the is this the one expiring? Yeah. No, excuse me. The one expiring in May. That's this one. Here I have, it cost me about $109 to put on this trade. I say about because it really depends at what fill I get filled at. In fact, it may even be possible, and I would attempt to be filled at a debit. Let me show you that. If you look here at the last prices they closed at, you could have been paid twice $23.75 to buy the sum of $17.58 plus $25.95, and that sum is less than that amount, so you would be actually able to put this on for a credit if you got filled at all those 3 prices. So I would attempt to get a fill, because if that's the case, you would say be paid a positive $100 no matter what happened, and so you'd have nothing to lose, and then I would just load the boat and buy as much as I could. Of course, that rarely happens. It has happened to me a few times. That's what you call a perfect box trade, in which you cannot lose money. And so it's worth at least attempting. But in this case, if I risk $109, because that's what I can finally get filled at, my reward, this is on the same date as this option expires, the 24th. I would only make about $150. That's a 1 to 1.5 risk-reward ratio. And for me, that's not good enough. So for me to make the $800 or $900 that I see here, it would have to expire at the 680 level on the 15th of March. So that might happen. It might go up. If we remember what I was thinking this thing could do. Oh, I no longer have it on the chart. I think it was this one. Here we go. I thought it could move all the way up to this level, come down here, then move higher. And it might move lower by May 15th, in which case I could still make that kind of return, but there's a lot of ifs there, and I don't like to, it's a lot too unlikely for my scenario. And if it doesn't happen, then I'd end up with a profit somewhere in this range, which would be a $400. It's about a 4 to 1 risk reward return. Some people may like that better. But remember, it's 4 to 1 over approximately a month period. I prefer the following, which is going to expire in 12 days. I think 12 days it could move into this range. And if it does, if I absolutely nail it and it expires right in this price range here, I am making, what is that, $650 to $900, risking $73. That could be as high as a 12 to 1 return. This purple line shows the price on Friday of next week. I'd put on the trade tomorrow, Monday. So at Friday, if the stock has moved up into, say, the 595 range, I'm already making about 120% on my option. If I chose to close it at that point because, say, something contradictory had come up and I don't expect it any longer to ever reach my target, I rarely try to close a trade when I'm halfway into it. I've noticed that most of the time it does, if I give it enough time, it does reach my mirroring position. So basically, but at times, something on the charts could have me take my profits and exit the position. I could do that if I so chose, if I'm profitable. So this basically, this play will give me anywhere from and of course if it moves up, if it moves up to my 680 level and moves much faster and keeps rising quicker than the date of expiration, let's say it goes up by the middle of the week, I don't think it's coming down, so I don't exit the position, goes down a little bit, then it moves up higher past 680, well, I would be somewhere in this range, and I would end up making, about a $420 profit on a $73 trade. That's a 700% return, and I would still be a happy camper. So that's it. That's the trade. I am going to put it on first thing tomorrow, and if I get filled, remember, always put these trades on with limit orders. And always remember, trading options is a risky proposition if you don't know what you're doing. So consult with a financial professional before you do it. That's it. If you found this video to be helpful, please hit the like button, and you might want to subscribe so that you're alerted when I produce future videos. Thank you very much, and thanks for listening to TradeJolt.com. Happy trading.